Good evening, everyone. Welcome to the channel. Today I am going to talk about Noah Holdings interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Noah Holdings Limited offers a wide range of businesses and services, including investment and asset allocation services for high net worth individuals and corporate entities, wealth management services, asset management services, customized value-added financial services, such as plus investor education, plus trust services, plus insurance brokerage services, insurance products, onshore and offshore private equity investment products, real estate investment products, public securities investment products, multi-strategy investment products, other investment products, lending services. Noah Holdings stock price surge. A multifaceted approach. Noah Holdings stock price has experienced a significant increase of 34.22% over the past year, driven by a combination of factors. While there is no single news event that caused this surge, several positive developments have contributed to the company's overall performance and investor sentiment. Key drivers of Noah Holdings growth include its strong Q2 2025 earnings, which exceeded market expectations, with a 78% year-over-year increase in normalized net profit. The company's overseas expansion has also been a major contributor, with net revenues from overseas increasing by 28.9% year-over-year and 35.3% sequentially in Q3 2024. Noah Holdings' strategic investment in digital yield funds and its exploration of expanding digital asset-related product lines have also boosted investor confidence. The company's commitment to shareholder returns through significant dividends has been another key factor, with a special dividend approved for the year ended December 31, 2024, payable in July 2025. Additionally, J.P. Morgan's upgrade of Noah Holdings from neutral to overweight in April 2025 further boosted investor sentiment. The company's improved profitability and operational efficiency, driven by cost controls and AI implementation, have also contributed to its growth. Overall, Noah Holdings' stock price surge can be attributed to a combination of strong earnings, overseas expansion, strategic investments, shareholder returns, and improved profitability and operational efficiency. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the following factors: performance-based income and one-time commissions from asset management business. Expansion into new markets, including Singapore, Japan, and Hong Kong. Development of innovative products in RMB and USD, increase in overseas wealth management and asset management. On the other hand, revenue decline is primarily driven by decrease in revenues from funds managed due to market fluctuations, intensified competition in insurance distribution and private equity products, gradual expiration of legacy onshore products, reducing management fee base, strategic shift in product focus impacting domestic insurance revenue. Net income and profit margins show significant improvement. The financial performance of Noah Holdings has shown a notable improvement in net income and profit margins. Net income increased by 39.41% from RMB 235,556 to RMB 328,356, while operating margin rose by 37.5% from 20% to 27.7%. The net profit margin also saw a significant increase of 42.9% from 18.4% to 26.2%. The improvement in financial performance can be attributed to several factors. One reason is the successful implementation of operational adjustments, which likely contributed to increased efficiency and productivity. Additionally, the decrease in loss from disposal of property and equipment, non-cash lease expenses, and share-based compensation expenses also helped boost net income. However, other income decreased due to unrealized losses from fair value changes on certain equity investments. On a positive note, income from equity in affiliates increased due to the rise in fair value of funds managed and co-invested by Gopher. Overall, these factors combined to drive significant improvements in net income and profit margins for Noah Holdings. The company is indeed generating positive operating cash flow, as evident from the financial summary on page 34 and page 46. The utilized amount of $163 million indicates sufficient funds to meet operational needs, while the unutilized amount of $52.7 million held in short-term deposits suggests prudent management of excess funds. Furthermore, the net cash provided by operating activities of $280,909, 2025, on page 46 confirms a positive operating cash flow, indicating that the company is generating sufficient cash from its core operations to meet its financial obligations and invest in growth initiatives. The company's debt level has undergone significant changes. Initially, the gearing ratio increased from 15% to 17.7%, indicating an increase in debt. However, this is contradicted by a later statement that there are no outstanding loans or borrowings as of June 30, 2025 and December 31, 2024. This inconsistency suggests that the company's debt level has indeed changed, but the exact nature of these changes remains unclear. The financial performance of various segments and regions has shown significant variations in the recent period. Notably, the wealth management business and asset management business have performed exceptionally well, with a 151.6% improvement and a 4,172.7% significant improvement, respectively. The domestic public securities, overseas asset management, overseas insurance and comprehensive services, and headquarters also showed positive growth rates of plus 9.6%, 16.7%, 31.9%, and 28.1% respectively. However, some segments have underperformed. The wealth management business, recurring service fees and other service fees, and asset management business, performance-based income, have shown decline in performance. Additionally, domestic asset management, domestic insurance, overseas wealth management, and headquarters have reported negative growth rates of minus 12.5%, minus 55.3%, minus 11.4%, and net losses from operations of $325,646, respectively. Management is navigating a challenging business environment due to volatility, trade tensions, and inflation concerns. However, they believe there will be a shift from inflation-hedged strategies to technology-driven deflation over the next 20 years. To adapt to this change, the company has developed an adaptive allocation framework with 3 strategic pillars: inflation-hedged anchors, deflation-hedged assets, and flexible bridge holdings. The company is confident in its ability to navigate challenges and capitalize on opportunities ahead, driven by promising overseas expansion results and a competitive advantage established in Asia. Management sees tremendous growth potential in serving global Chinese HNW investors overseas and remains focused on expanding the client base domestically and internationally while maintaining operational excellence. Acquisitions and divestitures overview. In recent years, the company has made significant moves to expand its global presence through strategic partnerships and acquisitions. Notably, it established a global headquarters in Singapore, solidifying its international footprint. Additionally, a partnership was formed with Tokyo Star Bank in Japan through its subsidiary ARC Japan. On the other hand, the company has also engaged in divestitures to optimize its investments. Specifically, it transferred certain investments from Level 3 to Level 2, resulting in a total value of RMB 95,924. This strategic decision aims to streamline and focus resources on high-priority ventures. The company's financial summary reveals a history of dividend payments. Specifically, it is noted on page 76 that dividends have been paid by the company. Additionally, there are declared but unpaid dividends of $76,777 in 2025, as mentioned on page 48. However, there is no indication that the company has bought back shares. That concludes the financial summary for Noah Holdings. Feel free to comment below, and I will be happy to answer them when possible.